An Indian tourist makes payment in seconds through UPI in Singapore. You think he'll be able to do it in France? What about other countries? The world is slowly moving towards an integrated payment system. Meanwhile, somewhere in the traditional banking system, it might take 2 days. These are two different worlds, two payment systems. One is fast, cheap, and invisible. The other is slow, expensive, and built decades ago. This is the old financial system versus the new one. And at the center of the shift is something that started in India, UPI. Is India's digital economy actually bigger than we think? Of course, when we say digital economy, most people imagine food delivery apps to order a pizza. But India's digital economy is much deeper than that. As per RBI report today, it already contributes around 10% of India's GDP. And if the current trend continues, it could reach 20% of GDP by 2026. This is not just growth, this is structural transformation. Economists usually divide the digital economy into three layers. Layer 1 is the core digital sector. This is where digital teaching is produced. Companies that build the digital world. Examples: IT services, software development, cloud computing, data centers, telecom infrastructure. And what are the companies which are into this? TCS, Infosys, HCL, Wipro. For decades, this sector powered India's digital reputation. India became the back office of the world. But this is only one engine of India's digital economy. Then what is the other engine? Why does India have two digital economies? So that people could have two apps to compare prices and order a pizza? India ended up building two completely different digital engines. Engine 1 is the IT exports, companies like TCS, Infosys. The revenue comes from outside India. This is an export model. And what is Engine 2 then? Digital public infrastructure. This is where India became unique. Instead of letting private tech companies dominate payments, identify, and data layers, India built public digital rails. Examples include Aadhaar digital identity, UPI payment infrastructure, digital document systems. These systems are collectively known as India's stack, and they created something unusual, a country where digital infrastructure is treated like public infrastructure, just like you treat the highway or electricity grids, and the biggest piece of this infrastructure is UPI. So why did every kirana store started accepting UPI? Because the Indians love free stuff. Before UPI, digital payment mostly ran through card networks, Visa, Mastercard. Every transaction had a cost. A small shop accepting credit card could lose 1.5 to 3% per transaction. That may not sound like much, but for a business with thin margins, it adds up quickly. Imagine a shop doing 10 lakh in monthly sales, credit card fees could go up to 20,000 or more. UPI changed that. With UPI, most transactions have zero merchant discount rate. For the first time, digital payments were cheaper than cash, and adoption exploded. Street vendors, taxi drivers, tea stalls. But what was the big story? It was not adoption, but it was the architecture. Why is UPI architecturally different from most payment systems? UPI is like using resources of a joint family. It's digital public infrastructure. It is a payment interface built on top of bank rails. To understand this, compare it with the United States system. In the US, the central bank launched FedNow. That was in 2023. FedNow allows instant bank-to-bank transfers, but it mainly acts as a settlement rail for banks. UPI goes further. It allows payments through multiple methods: QR codes, mobile numbers, UPI IDs, auto-pay subscriptions, merchant payments. In other words, FedNow is a bank infrastructure layer. UPI is a consumer payment ecosystem. That difference made UPI deeply integrated into daily life. India did not just build instant settlement, it built a retail payment ecosystem, and the rest of the world noticed. Why are other countries suddenly building UPI like systems? Looks like other countries have also started loving Indian free stuff like UPI. Card networks charge merchants a percentage on every transaction. That money flows through multiple intermediaries: customer, merchant bank, card network, issuer bank. UPI removes many of those layers. Instead, the flow becomes customer, bank, UPI switch, merchant bank. The network itself is run by the National Payments Corporation of India, a public infrastructure institution. This model inspired several countries. For example, US has FedNow, UK has faster payments, Brazil built PIX, an instant payment system run by the central bank. Pix adoption was astonishing. Within a few years, over 150 million Brazilians started using it. It overtook many card transactions. Small merchants loved it for the same reason Indian merchants loved UPI: low cost, simple QR payments, fast settlements. The world was starting to see a new model. Not private systems, but a public infrastructure system in place. So, can payment systems actually connect between countries? For decades, the answer was mostly no. It's like a group of dance where everyone is dancing to his own tune without any coordination. International payments relied on the SWIFT network. Transfers could pass through multiple correspondent banks. Settlement could take 1 or 2 days. Then something interesting happened. In April 2021, Singapore and Thailand launched a new experiment. They connected to domestic real-time payment systems, PayNow in Singapore, PromptPay in Thailand. New people in Singapore could send money to Thailand just a mobile number. Money arrived in minutes. Currency conversion happened automatically. This experiment proved something powerful. Domestic payment networks could be linked internationally. That idea quickly spread. Why the country is starting to link their payment systems? Because it's a game no one wants to be left out. Because the global financial system is quietly evolving. After the Singapore Thailand experiment, similar initiatives began appearing. One important example is the linkage between UPI and PayNow. People in India and Singapore can now transfer money between bank accounts instantly. Several other countries are exploring UPI integration for merchant payments. Countries actively are using or accepting UPI. These are mostly tourism or remittance corridors. For example, in the countries like Singapore, UAE, France, Mauritius, Nepal, Bhutan, Sri Lanka, Qatar. In places like France, UPI is accepted at tourist locations such as the Eiffel Tower. Japan is enabling UPI acceptance through partnerships with local fintech companies. These are not full domestic replacements. Countries are still building their own systems, but they are interconnecting them, and this is where the story becomes global. So, is the world quietly building an internet of money? It certainly looks that way. Global institutions are now experimenting with ways to connect multiple instant payments. One major initiative is Project Nexus, led by the Bank for International Settlements. The idea is simple. Instead of each country connecting separately, create a network that links multiple national payment systems. In other words, an internet for payments, where money moves across borders as easily as sending a message. The shift is subtle but profound. The real competition is no longer UPI versus Visa, it is something bigger. Public financial infrastructure versus private payment networks. One model extracts fees, the other treats payments as public infrastructure like roads or electricity. And once countries start connecting those systems, the financial map of the world begins to change. So why is India central to this position? If one of the backbenchers of your class can get A grade in a subject, then suddenly the rest of the class feels they can also get an A. This is the case with backbencher India versus the world. Because India built something scalable. UPI transactions now exceed billions per month. In volume, they already have surpassed many cards networks domestically. But the real strength of UPI is not just scale, it is interoperability. Banks, fintech, companies and apps all operate on the same infrastructure. Private innovation happens on top of the public rails. This hybrid system combines government infrastructure, private innovation, and that combination is powerful. Countries studying digital payments increasingly look at two models. The American model, private companies dominate. The Indian model, public digital infrastructure dominates. Both will likely coexist. But the second model is spreading faster across economies. So who wins, the old system or the new system? Let's return to our story. A traveler scans a QR code, payment done instantly, no paperwork, no waiting, no invisible fees. Meanwhile, the traditional system is still moving money across the borders old way. Days of settlement. The old system is not disappearing tomorrow, but it's slowly losing ground because once people experience instant cheap payments, going back feels impossible. And the next stage of this revolution is already forming. Not just national payment systems, but interconnected global ones. An internet of money, where payments cross borders as easily as messages cross WhatsApp. And somewhere in that future network, a simple QR code powered by UPI will be the hero.